Hello everyone, welcome back to Theta Capitals YouTube channel. So in this video, I'll be discussing everything related to mutual funds. And actually there will be two parts of this video. In the first part, I'll be discussing what is a mutual fund and how many types of mutual funds are there. And I'll also discuss that which points you should consider before choosing a mutual fund. And in the second part of the mutual funds video, I'll be discussing that what are the best mutual funds in each category and how you can invest in those. So let's begin. So first question is, what is a mutual fund? A mutual fund consists of portfolio of stocks, bonds and any other kind of securities. So I'll explain it to you with an example. So let's take an equity mutual fund and let's say large cap mutual fund. I'll pick this as an example. So in this ICICI Prudential Blue Chip Fund, they have mentioned the sector allocation as well, in which sector they have allocated their fund and in which companies they have invested. So in ICICI Bank, they have invested 8.27% of their fund, and this is Treasury bills and Reliance Industries, L&T, Infosys, etc. So this is how the mutual funds work, and that's how they invest their funds in different kind of stocks or bonds or any other kind of securities. So now moving on to second question, that how many types of mutual funds are there? So there are majorly three types of mutual funds: equity, debt, and hybrid. In equity mutual funds, we can further subdivide it into 6 categories. The first one being index fund, second large cap, third mid cap, fourth small cap, fifth one being flexi cap, and the sixth are ELSS. So let's understand what is an index fund. So index fund is a fund in which they invest directly in an index. So for example, if I click over here, so we can see that it is UTI Nifty 50 index fund. So whatever returns we have got in an index which is in Nifty 50, we would have gotten this return in this Nifty 50 index fund as well. So these returns are similar to the Nifty 50 returns which we have got in past 1 year, which is 23.21%. Now moving on to second subcategory, which is large cap fund. So these mutual funds basically invest in large cap stocks, as the name suggests. And the third one is mid cap fund. So these funds invest in mid cap stocks. The fourth one is small cap fund. This invest majorly in small cap stocks. And the fifth one is flexi cap. So these are the mutual funds which invest in various type of stocks like large cap stocks, mid cap stocks, and small cap stocks. So these are the flexi cap funds. And the sixth one is equity linked savings scheme fund, which is also called ELSS fund. So these are the tax saver fund in which you get the tax deduction under section 80C. So you can invest in these funds to get the deduction in for the income tax. So these are the ELSS tax saver fund. That's all for equity mutual funds. So now moving on to second type of mutual fund, which is debt mutual fund. So there are majorly 6 types of debt mutual funds. The first one being a liquid fund. So these are the least riskiest debt mutual fund, as you can see from the graph of the returns. And they invest majorly in CDs, commercial paper, treasury bills. And the second one being money market fund. So they are also similar to liquid fund. They also invest majorly in CDs, commercial paper, T-bills. And the third one is corporate bond fund. As you can see from the graph, it is not linear, and they carry some sort of risk, and they invest in non-convertible debentures, government securities, current assets. So the fourth one is short-term fund, and they invest majorly in NCDs, government securities. They are also similar to corporate bond funds in some way. And the fifth one being long duration fund, and sixth one is gilt fund. So these are the mutual funds which carry a higher interest rate risk. So whenever the interest rate rises, their returns will go down significantly. As you can see from the graph itself, it is not linear for this long duration mutual fund, and similarly for gilt fund. So this is all about debt mutual fund. Now moving on to last category, which is hybrid mutual fund. As the name suggests, it is a mixture of both equity and debt mutual fund. So there are majorly four types of hybrid mutual fund. The first one being balanced advantage fund. So this is an example of balanced advantage fund. As we see, the risk involved is very high, and this is the sector allocation of this balanced advantage mutual fund. As we can see that they have majorly invested in equity mutual fund rather than debt mutual fund. The second one is multi-asset fund. As the name suggests, they have invested in various assets, and they also invest in gold as well. This is also very high risk involved mutual fund. This is the sector allocation of this mutual fund. And the third one is a hybrid fund, equity hybrid fund. So this is also the similar kind of mutual fund in which they invest in both equity and debt. And the fourth one is the conservative hybrid fund, which is the least riskiest hybrid mutual fund. It's because they invest majorly in debt mutual fund. So this was all about the various types of mutual funds and their subcategories. So now moving on to third and final point of this video, which is how to pick a mutual fund. And before moving on to this section, I would like to explain the rule of thumb for asset allocation. So let's say if you are 25 years of age, so 25% of your investment should be in a less risky asset, which can be in debt mutual fund, and the remaining 75% can be in a high risky asset, which can be in equity mutual fund. So now moving on to how you can select a mutual fund. So let's take an example of a mutual fund, let's say large cap mutual fund. This mutual fund, ICC Prudential Blue Chip Fund. The first point is investment strategy. That it totally depends on for how long you are going to invest and what is the purpose of your investment. And the second one is fund performance. So as you can see over here that in the last 1 year, it has given 37.73% returns. But you should know that the past returns doesn't guarantee future returns. Hence, you shouldn't completely rely on this. The third point is exit load. So as you can see over here that it is 1%. So I'll explain what an exit load is. So let's say if you have invested in this mutual fund and if you would like to do the redemption from this mutual fund, so you will be charged 1% penalty if you redeem before 1 year period. So this exit load varies according to the mutual funds. There are debt mutual funds which hardly charges any exit load. And the fourth point is expense ratio. So you can check out this page which briefly explains what is an expense ratio. So this is the fees charged by the AUM, and it is annual basis. So this mutual fund charges 0.9% annually. The fifth and final point is tax implications. So different mutual funds attracts different tax implications. So this website briefly explains the different tax rates which will be charged for different types of mutual funds. So I'll mention the link of this website in the YouTube video description. So this was all about different types of mutual funds and how to pick a mutual fund. So in the next part of this video, I'll be mentioning the best mutual funds in each category. So stay tuned. You can also follow me on Twitter. The username is Theta Capitals. So that's all in this video. Stay tuned for the second part of this video. Until then, goodbye.